Each year, mutual funds and other registered investment companies are required to file a Form NPX with the SEC, on which form these investors disclose how they actually voted for the year-long period ended June 30th. These NPXs are required to be filed with the SEC by August 31st, thereby making the voting records for the past year by these investors publicly known. Today on Zippy Point.
Quick Zips by Zippy Point.
Quick and dirty. I'm Brock Romanak, and I'm a big fan of yous. If you haven't seen the Form NPX before, you're not missing much because they can really be hard to navigate, hard to decipher. Each mutual fund typically is a member of a family of funds. Each member of the family filing its own Form NPX that lists its voting record for each company's stock it holds in its portfolio. So it can be really a long laundry list of pages and pages. Here's a snapshot from one of these funds from Putnam. It's 71 pages long, and it goes company by company how they voted. The SEC actually has a separate web page on its site where you can search through the NPXs filed by mutual funds by name. And then bear in mind that not all institutional investors are required to file NPXs to make their voting records publicly known. Only those investors that are mutual funds that are registered investment companies are required to do so. There are plenty of big investors out there that aren't required to be transparent about their voting record. I should also mention that these mutual funds that are required to file NPXs about their voting record are also required to describe their voting policies and procedures in their annual and semi-annual reports that are sent to the shareholders. Okay, so let's look at how the voting actually fared during 2020. In its September 2020 issue of its Proxy monthly newsletter, Insidia, formerly known as Proxy Insight, gives us a nice summary of its review of the NPX filings made by mutual funds, the 23 million votes that were cast at the annual meetings for the Russell 3000 over the past year. For management proposals, it was basically a wash compared to the prior year. There was only a 0.4 percentage point move upwards in the average investor support for both all proposals and director elections, and a drop of 0.3 percentage points for Say on Pay. Say on Pay continues to draw about 5% less support compared to other management proposals, as noted in this chart. On the other hand, shareholder proposals showed a little bit more change. Support for them overall fell by 1.4 percentage points, taking that level below the 50% mark. Notably, the support for environmental E&S shareholder proposals rose by 7.3 percentage points. That's a dramatic change given the trend of supporting shareholder proposals less on average. Here's a chart showing how the larger institutional investors voted on average: BlackRock, Vanguard, State Street, Fidelity, JP Morgan Asset Management. And then here's a chart identifying those investors that are less likely to support a company's Say on Pay. This list is dominated by state pension funds. As noted in my separate vid guide about what Insidia does, they have sophisticated algorithms that splice and dice this voting data. These nice charts in its brief article in the September issue is but a snapshot of all the information they have. But this article does provide some useful information for sure. Let me know what you think.